from here, things could worsen for oil marketing companies which have already facing fairly tough times. CRISIL has put out a report suggesting that things are becoming fairly immediate and the situation is dire. In particular, an adjustment of diesel prices is required. Let me just get in Rahul Prithiani, Director of CRISIL Research. They've authored this report and came out with it yesterday. Rahul, good afternoon. Thanks so much for joining us. Let me just first start with how things stand right now. Even at crude at current levels, under-recoveries are fairly alarming, and as was obvious from the last quarter's numbers, without government compensation, that's just adding to the financial pressures on the balance sheet of these companies as well.
Yeah, so if you look at the Q1 numbers, we've had under-recoveries of close to 48,000 crores. Now, this is a very alarming number. If you look at the whole of last year, we had under-recoveries of close to 1,40,000 crores, which itself was a very high number. And also bear in mind the refining side of the business of these oil marketing companies is not performing too well because global demand remains weak. As a result, the refining margins, the gross refining margins are under pressure. And in this quarter in particular, we also saw inventory losses due to crude oil price volatility. So all this has resulted in just Q1 losses of close to 40,000 crores for the three OMCs.
What are you projecting under recoveries to be for the full year? Do you have a projection out there based on current prices perhaps?
Based on current prices, we are likely to see under recoveries in the region of close to 1,80,000 crores. But we expect some sort of movement in terms of diesel prices being hiked, so which would limit the under recoveries.
And you're pointing out in your report, of course, as a lot of us have been saying that diesel accounts for nearly 60% of the under-recoveries. So if there's one thing that the government needs to move on, it's diesel. And then there's the other aspect of how it's skewing consumption as well.
Right. Increasingly, we've seen a trend wherein more and more cars that are being sold are towards the diesel side. As of now, as per our latest estimates from the auto team, close to 60% of the cars are actually being sold under the diesel variant. So clearly there is a preference towards these vehicles because the cost differential and the ownership cost is quite significant. So increasingly we are seeing sales of diesel cars going up.
That's true. There's been some talk, though, that there could be a tax and excise coming in on diesel-linked vehicles, but we don't know that will happen. Just, switching focus a little bit, Rahul, to their debt equity positions. And again, those debt equity numbers are looking quite uncomfortable as things stood at least March 2012. What's interesting in the case of these companies is that because they're government companies, they continue to have access to funding. But, interest costs will build up.
Yeah, clearly, I mean, if you look at the last few years, your debt equity ratio has worsened from 0.6 levels to close to 1.7. And given the alarming levels of under recoveries that are already there in the system, last year you saw 1,40,000 crores. Now, many a times payment compensation which comes from the government maybe with some delay. So as a result, the working capital requirements of many of these entities goes up quite significantly. So intra-year probably the debt, the gearing levels may be even higher, and which also results in significantly higher interest costs, which again eats into the profitability of these companies.
But it never gets to a point where they have a problem of accessing this working capital requirement, right? I mean, just by virtue of the fact that they are oil companies, government oil companies?
Yeah, they are very critical critical in the overall scheme of things in the oil market, and there will always be government support forthcoming, and there will be some disbursement of funds also in case there is an issue in terms of liquidity. So the government support will be coming in because the importance of these entities for the overall oil markets.
Fair enough, but that doesn't mean we should be comfortable with the way things are being run at these oil companies. Rahul, thanks so much for giving us some details within that report. We're all waiting to see when the government will bite the bullet on these adjustments on prices, but who knows when that will happen. We're almost done on time here on Power Lunch, but I do want to flag off one